Good evening, guys. Ken at Tortoise Capital. It is the strategy podcast, brief one tonight for June 12th, 2020. So I went off the base camp today, the second time in 3 months. Went into a post to meet my Nigerian international officer who's heading back to the homeland next week. He said something really nice to me. That was that of the 10 things that were great about coming to the United States this year, 9 of them were me. Because we had developed a pretty special relationship in the classroom talking about his project to improve conditions in his country in his role as a civil military leader. He's got a personal relationship with Mr. Alito Dangote, who's the richest man in Nigeria, voted the most powerful man in Africa for the last 5 years, worth about 10 billion. And he's got this officer on speed dial. And so Mr. Dangote has been working to follow the Bill Gates and Warren Buffett model of a foundation work. And so he and I were talking a lot about that. And he's picked up on some of my ideas. So we made an agreement to take some of our little tortoise material back with him to Nigeria. He's also got a personal relationship with the Minister of Finance, who's managing their petroleum trust fund. And so it just may be that some of this work that we're doing with the riflemen and the supported spring crossing, we may end up teaching to the people that they may thrive. And so I'll be turning the supported spring crossing and then the other 5 patterns of hybrid trading into bulletproof courses that can be taught in 5 hours with a week of practice with support with certified coaches, so that we can roll this out and give more people the opportunity to be independent and free. So that's going to be an interesting experience. It'll be fun. I made the connection between these guys in Nigeria and Mike Dungy, who is an angel on the earth at the Ascentic Foundation in Australia, a self-made philanthropist who's used some of my modest suggestions, but really his hard work and application to develop a philanthropic foundation that's doing great work in Asia, Africa, and Australia. And so this stuff works. And if you apply yourself to it in a business-like manner, we can get it done. I wanted to address a comment Neil made in the room, and it was really on this idea that we talked about yesterday briefly, and that was the idea of once you've got riflemen trained on the supported spring crossing, that it's not impossible to put together a team, a squad of folks who are working together to find the best target. And so one of the things that we always are concerned about is finding the mover. Well, in the early days of this thing, if you're on your own, there's a limit to how many things you can watch, and can you find the mover among the things that you can watch, and then how do you watch the things that you can't watch by setting up alerts and whatnot. I believe the easiest, most elegant solution long term is that bundle, because it lets you find these things. But another legit way to do this and to build a mastermind accountability program is a rifle squad that might be assigning one sector of each of those 5 XL series, and then some subordinate companies that are in the logic chain. So one guy in the squad is watching XLB and Alcoa, Cliff, Nucor, and US Steel. On days when XLB is better than the market, one of those 4 is really moving, and they're all frog champions. So if you were the guy in charge of that sector, you could alert the squad, and then the squad could come to your side of the perimeter and take the shot. So if you were trading that on 1 minute charts, you might see some of those early indications shaping up and give them time to just quickly reset, put the sight picture on, and get ready to go. Now, if you're trading longer term, like hourly charts or swing charts, then that's not as big an issue because you have time to cycle and your alerts give you time to check it out, and your accountability team can have different ideas kicking around. The closer you get, Neil, to real-time trading on 1 minute charts, the more that fire team or squad, a fire team is 4, the more that fire team or squad of guys has to really be connected with a singular focus and purpose and a commitment to each other to watch each other's backs. Otherwise, it kind of breaks down pretty fast. Now, the chat room's not an efficient way to run that kind of command and control room. I mean, it could be done, but there's a lot of other things going on, and there's just better ways to do that with voice. So setting up like a Discord chat server that is very robust and that's used for playing games across the world virtually, or a Zoom conference call. Those are the kinds of things that allow you to support that kind of real-time trading with a fire team or a squad. And then if you had guys that were trained in that basic rifle marksmanship and knew the patterns and had a really good radar screen and had rehearsed your stuff, you could very nicely cover the world market model every day in certain periods of time, and you'd be pretty happy with that. So the two target arrays that I would go for, one is sort of this SPY in the center circle, and then those series of XL sector spiders, and then an outer ring of Frog Champion company targets. And then a secondary one might be just using the Frog Champions all together, and then just watching that little connection. As an example, Devon, U.S. Steel, Brazil, Mexico, Simon Property Group, and Virgin Galactic, and looking for frogs to develop out of that. So the main point is that to assemble a team of guys is possible and has certain strengths, and there's accountability and mutual support already built in, but you, I think, have to have a pretty common point of view on what you're trying to achieve, or the timing doesn't work, and it's kind of easy for inequities to develop. The longer your time frame, the less that's an issue. The other side is the bundle really plays a role as an automated squad. It's like the robot that's searching for things for you. And it doesn't have to be the bundle. It can be anything you set up in TC2000 or your broker platform. You just develop some proficiency in how to go through the mechanics of setting up the dashboard. But that's sort of the operational infrastructure support that you have to consider as a command, control, and communications platform to organize the efficient cycle of detect, decide, deliver, assess. We talked about that in the hybrid course and in some of the earlier nightly podcasts. But detect, decide, deliver, assess. Detect means that you got to get the early warning in time to get it and to be ready for the ambush or to take the shot. Decide that that's the one that you're going to execute once you're looking through the sight picture and from your steady position and you're relaxed and ready to go. You decide that that's the one that you're going to take. And then deliver is pulling the trigger and managing the trade properly all the way through the life cycle. And then assessment is to make good records of it, get back into the zero state and be ready for the next cycle. So detect, decide, deliver, assess. We call that D3A. That breaks down the execution cycle into sort of the tactical trade. And then if you can lower the cognitive cost, then you can execute a lot of tactical trades in the sequence as part of a larger theme. So like, say yesterday was a big sell-off with periodic short burst gains. So if that was the theme of the day, the operational theme, then there were a series of tactical trades available. And if you're just executing battle drills, you're just going to work and collecting R. And then today was more like a recovery day with some equal opportunities on both sides of the supported spring crossing and the supported fall crossing. So that's the operational framework of day trading, was what kind of day is it going to be? And then the strategic one would be, where are we in the swing trade cycle for markets? That's sort of the strategic, operational, and tactical levels. If your primary execution is like 1 minute charts, then the strategic view is, where are you in the swing trade? If I'm operating on hourly charts for my tactics, then there's still a strategic, operational, and tactical framework, but the time frame is a little different. So then my tactical decision making might be made on hourly charts. My operational theme for the week might be the swing trade pattern and where we are in the 10-day cycle, and then where we are in the weekly cycle, where market bull, sideways, or bear, might be the strategic point of view. So there is this relationship of the area you're operating in for tactical actions, one level up probably for those themes that link these trades, the tactical trades, together, and then 2 layers up for that strategic level. And that's reflected in our regression line fractal framework, in a sense, because you're seeing 2 levels higher when you're looking at the RL 270-90 pair, right? So I just wanted to address Neil's points about, has anybody thought about doing this? Yes, we have. Dave Anderson, who just took the hybrid course and is about an 18-year Army career officer, special ops and whatnot, he and I are exploring the possibility of his transition into doing this full time after he retires in a couple years, probably. And so we're thinking our way through how he might take on this challenge of training lots of riflemen and lots of rifle squads and supporting their development. And then he likes the tactical trading, and he's very good on attention to detail. So that opens up some possibilities for more of the operational training. I tend to favor the education and the strategic view, and giving folks robust ideas for all of the time frames of their total family and estate portfolio. And I trust people to take my stuff and then apply it to their individual circumstance. But there is room in there for guys to get together and work on common goals through common means. As an example, the Euro guys and what seems to be developing in the Aussie zone. So just to address Neil's point of view, that's what I wanted to say. Okay. So a pretty good day for me today at work. My Nigerian officer gave me a nice little plaque, and I gave him one of our game-worn jerseys from the soccer club, and a little tortoise coffee mug, and a little tortoise statuette from the desert. And that's something's good going to happen from that, I think. Among the most important lessons I teach here at the school are not so much the tactical planning and sustainment, but I work a lot with the international officers, and we examine the civil-military relationships. How do we create a professional military class that recognizes that they're there to support the constituted civilian authority to provide order and defense and safety so that civilization might thrive? And so developing that professional military ethic, in some cases, these guys might be the first generation removed from a revolution. And so they're trying to create from the smoldering embers a professional military class that properly respects civilian authority. Well, long term, that's important for civilization and peace. And so getting a chance to work with the best and brightest guys from 120 different nations every year through the master's program that I help support is a really gratifying day at work. And I always hate to see them go, but I'm always excited about the new guys that come. And then we do a pretty good job of keeping track of each other after they graduate and head back home. That's a satisfying experience. Well, let's take a look at the day today and see what we have. So here is the 10-day look back period. So our 10-day high was about 5 days ago, and a new 10-day low was established today, and that range is about 7.5% from the 10-day high to the 10-day low. That 10-day high is also the 30-day high, and it's very close to the peak of the RL10 way up here. You can see where it crossed the baby dragon. The 10-period regression line, the straight line, went straight flat today. So you can see how quickly adaptive that thing is. That had been pointed, diagonally up and very strong, for the previous 10 days, except for the last 2, and already it's kind of flattened out and gotten back to neutral. Part of that is that there was a nice little rebound later today that closed halfway up the price stack. So we had about a 2% gap up, sold off, throughout the midday, and then in the second half of the afternoon, fought its way halfway back up the stack to close here. So right in the middle of the daily range, but still a considerable distance from yesterday's high. We are in the land between the Bollinger Band mean and Z1. It's almost exactly in the middle. We're still underneath the PSAR, which is acting as a price target right now, right just at about Z-1, or Z+1, I should say. We have the range of the dragon extremely wide, and the dragon slope is flat, and the RL30 extension is almost flat. Only the PSAR is really showing that previous strength. So this is acting like resistance here. It's got to really get through that those prices at about excuse me, around 310. It rejected at 310 today and sold off. So I'm really looking at this 310, 311 around the edge of the river as being a pretty strong cap on that. We've got to see price get through there next week, or then otherwise we will be able to discount these last 4 days. You can see this weekly range was extraordinarily wide, half again as big as the previous week, which was twice the size of 2 weeks ago, and which was twice the size of 3 weeks ago. So that entire 20-day stack is now really at risk, and today's price action was really just a half retracement, not a full-throated recovery, and there's a long weekend of things to look at with plenty of shenanigans and circus activity in our political system, desperate for leadership at the national level. So we are, in my view, we are deeply in limbo and do not have a long-term point of view. I am emphasizing, the core positions are long and strong because of the commitment to print unlimited money. So long-term, those are okay. The swing trades, it's sideways normal right now, and this sell-off, which looks like about a 50% retracement of this past 20 days, is such in limbo that there's an equally likely big move in either direction that's very plausible and supportable. So this is no time to be swing trading. This is a great time to be emphasizing the intraday trade and then being flat overnight and flat into the weekend. So I'm carrying 0 swing trades over the weekend. And it's going to be that way until we start seeing this thing shake out next week. Targets to the upside is the lower edge of the dragon at about 308. Excuse me. And that's really near the high of the day too. That bottom of the dragon, the PSAR up here, and Z1 around 310.5, 310.75. Spine of the dragon around 312. The top skin of the dragon at 316. Z1, I'm sorry, Z2, and the 10-day high up here around 323, 324. Support to the downside, very strong confluence of support here. The 10-day low, the long-term fair value, the Bollinger Band mean, all of that acted as real strong support today. And if you come all the way back over here to about the 2-3 week low back in here, this is where that last move that ran up to 324 kind of all started from. So it has come back and found support there again, but it's bruised. So are we likely to see just an unmitigated run? Probably not. It'll probably be more like this grinding move out of the last time it consolidated from here. So this 300 is really important psychologically and technically, and we'll see how that goes. I see the further support down here at Z1, the RL90, and the Dragon Belly all around this 286-ish range. And so while the upside is still there, we just got a little dose of reality here these last 2 days. Said, sleeping bears wake up sometimes. So don't count those chickens. All right, so what worked today? I just want to reinforce this whole idea of finding the mover. So if we'd had one of our guys on the in the rifle squad that was looking at XLB, he would have blown the whistle and said, hey, the S&P was up 1%, but XLB was up 2%. And let's take a look at the top 4 symbols today. So if you got alerted on XLB, you had your pick of Cliffs Natural Resources at 13%, U.S. Steel and Alcoa up over 10, Nucor at 4, and then had some of our other standbys here: Boeing, Simon Property Group 5.5%, Mexico at 5%. So the XLB sequence, that whole series, that logic chain really got activated strongly today. Energy was also pretty strong at 2.52%. It was even better than XLB, and there's clean energy. The XOP ETF up almost 4%. Devon Energy up 5%. And then again, a couple of our specials, the Virgin Galactic, Simon Property Group, all with very strong moves. So finding the movers today was really seeing the market going up, finding the sectors, and then drilling down to the sector specials. Things that suffered today: Walmart, Merck, Treasuries. But again, some of the key tech leaders still showing some weakness: Intel, eBay, Amazon, Google, Microsoft, all less than the S&P today. So there's still some half-hearted leadership at play. I want to just take a quick look at the template I made for DIA and EWZ, and then we're going to go take a look at some chat room trade frames that were offered from the people. So I just want to reinforce some of the lessons from the SSC, the supported spring crossing. All right, so this is some Brazil from the early mornings, and what I'm going to do is just highlight the SSC. But while I'm here, it's not unusual on these frog champions that when the SSC is not working, or while we're waiting for that thing to develop a harsh winter so that we can play it, that's where guys looking at the supported fall crossing to the downside, or the supported winter crossing, or collapsing dragons, you are the guys that are making bank, while the snipers, the riflemen on the supported spring crossing, are waiting for you to finish your harsh winter so that they can bring their sight picture to bear. So I'm showing that today as the red squares, just so that we get that other side of the coin and show how those things are connected. So I want to start with the supported spring crossings first. So here's one in the black square. There's your harsh winter. Here is the RL10 rolls over, crosses baby dragon, turns to spring, crosses the dragon. The PSAR is in place, so I would see a reasonable entry at the green dot. I'll try to get this a little bigger so we can, that's too big. Sorry about that. Yeah. Get my big blue arrow here. So here is our summer, fall, winter. There's a collapsing dragon in here. Here is a supported fall, a winter crossing. This one would be the collapsing dragon. Just while we're here, so that would be the collapsing dragon because it fails through both of those bumps. This would be the supported winter crossing. So on this one, I see the winter becomes spring, rolls up, crosses the baby dragon, crosses the RL10, the PSAR flips. That looks like a reasonable entry to me with the yellow box representing the initial risk. This thing moves just like we said yesterday. If that thing moves like a rocket all the way through to the far side of the river and gets all the way back essentially to the VWAP and then starts failing, that's one that I'm just at least going to scratch. Like, I'm not going to let this come all the way back down here. I'll just take that scratch in a heartbeat and say, well, nothing there. Nothing to see there. I would not be offended if you then took that as a collapsing dragon and got paid here. So I'm just showing that as this little green dot is preparing for his supported spring crossing, going to try to get back. He's delighted to see that there's this harsh winter. Well, I'm just going to point out that on this failed supported spring crossing, which now reinforces this downward move, this is just the second leg of that previous fail. Just notice that the size of this failure is the size of this failure. So that's leg one. Tried and failed, that's leg two. So the collapsing dragon is your friend. When those supported spring crossings don't work, it's not bad. It's not unusual to expect that second leg down. Lag is bad, can't help it. The recording will be better because that gets recorded off of my screen. Let's see if I can change the. Try our other connection. Let's see if this one's any better. All right, so the second supported spring crossing also is a failure in my view. We get the harsh winter. The winter reverses, crosses the baby dragon, crosses the dragon, turns to spring, and the PSAR flips. So that's a reasonable entry at that green dot. It gets, this time it doesn't even get to the Bollinger Band mean and then starts failing. So this is another one where you shouldn't let it come all the way back here for a full execution R loss. So I would take the take the exit here when it crosses through the dragon and the dragon is rolling over. Not offended if you tried that short. All right, so the third shot on the supported spring crossing. Now you can see to the left there were two big legs down, harsh winter. Two big legs down, harsh winter. Two failed supported spring crossings. The third one is the charm. So the RL10 winter crosses a baby dragon, turns into spring. The spring RL10 crosses the dragon, the PSAR flips, so you get some entry vicinity here with a stop down here around 29.65, and then a reasonable payoff is up here at 30.30 when it comes all the way back to the Bollinger Band mean. There was an opportunity to add a position here on an emerging dragon or a supported fall crossing. So that one, you know, the morning session nets out pretty well, even if you're just using the supported spring crossing. And then if you can play the other side of the coin, once you get a little proficiency, then you'll be even happier. The afternoon, there is a, let me let that come up on your screen. So in the afternoon, this is the end run of that supported spring crossing we just saw. That turns into another harsh winter. You get the standard RL10 reverses, crosses a baby dragon, crosses the dragon, turns to spring, PSAR flips. You buy it here just a shade below the Bollinger Band mean. It runs out past Z2, and a reasonable exit in here gets you paid about 1 execution R. This one is crucial because I want you to see this as the entry on the downside. So I want you to notice the lower high from the peak of the RL10 to the peak of this RL10. That's a downward slope, and the hump of the dragon is higher to lower. So that makes this supported winter crossing very nice because you don't have to wait for the previous RL10 or the dragon belly to collapse or the Z3 breakout to collapse. You can get about a 20-cent earlier entry right here, and then you get to ride this collapsing dragon all the way down. But for our sniper, he sees the harsh winter. The RL10 reverses, becomes spring, crosses the dragon, PSAR flips, gets a reasonable entry here at the green dot. It just gets to the Bollinger Band mean and fails, so I see that one as another one that you probably cash somewhere around this red dot and the around the PSAR in here. At worst, you take a full execution risk. 10 minutes later, you get the same pattern. It makes a slightly higher low in the RL10, turns to spring, crosses the dragon, PSAR flips, buy it where you're supposed to, and bang, this one pays off big compared to the fractional loss you just took. You get another set of higher lows here, and the supported crossing again gets you paid. So on EWZ, just using supported spring crossing, you should be net positive for the day. Okay, we'll shift now to DIA. Let's bring that up on the screen for you. Okay, so this is the morning session in DIA. This looks a lot like the EWZ. where there was a nice big gap up. You get a set of lower highs in the RL10s. And some guys in the chat room got the collapsing dragon entry. There's leg 1, leg 2. I actually showed that one on my my flash card today. I said that is just 2 standard trades in the usual way on DIA, and how many of those do you want every day, and how many would you take? So you have a chance there to get 2 routine trades to the downside. Concentrating on the supported spring, I think you could reasonably have tried this one here in between those 2 legs down. That would be such a fractional loss. Right after your exit, it rolled over and started collapsing, so you're not going to stick around on that. And even if you just take the PSAR stop, that's a fraction, and that leads you right into a stop and reverse and a big payoff. My favorite pattern. Then if you tried that second one, again, same issue. Doesn't even get across the Bollinger Band mean, fails. You might have tried that short and probably scratched. But then this supported spring crossing gives you a huge payoff, and that's the VWAP magnet right there going into lunch. Supported spring crossing, you could reasonably hope to see a move to the VWAP. That's exactly what you got. There was a chance to get a second position. So even if you only play the long side, that third trade pays off big. So you could be 1 for 3, but with a big payoff. 2 slivers of losses and then 1 big payoff. Let's see, that was, I'm sorry, the afternoon trade now. This looks a lot like the EWZ. Again, I've highlighted the red boxes to show potential collapsing dragons and supported winter crossings. It looks to me the first supported spring crossing is a fractional gain. I mean, a sliver. It rolls over pretty quick, but gives you a chance to get out without losing money. That leads to a nice big leg down, which leads into a supported spring, which I think is a loss. The second one is a scratch. The third one is a fractional win. The fourth one is a reasonable payoff as it finally works its way back to the VWAP. Okay, so the basic rifle marksmanship today on the long side only should pay off on our 2 standard targets in EWZ and as I put a quick quiz. This was CLF, so I want to just show you the difference between trading the indexes and then trading some of these special frog champions. So frog champions are named because they stand out for the orderly directional movement that they make intraday and as swing trades. And Cliff is one of those, Cliff's Natural Resources. So you saw how choppy the afternoon session was in DIA and EWZ. There's no choppiness on this one. There's probably 2 supported spring crossings. Oops, that's the box. I need the arrow. Let me just put the highlighter on it. So this first one is probably like this. You probably get paid in that yellow box with a supported spring crossing somewhere. And the second one is this. And that second pullback probably gets you out. And if you were paying attention in class when you saw those 2 exhaustion bars, Eugene was calling them, those 2 dragon horns that peak up near Z3, you probably would have taken my advice and gotten out of here. But then the supported fall crossing, you got to take all the advice, gives you that third big chunk. So those are 3 trades that really pay off with our refined technique in here. And then, without even trying too hard, I might say, yeah, there might have been a 4th trade in here on the downside. But, realistically, as strong as those sectors were, I wouldn't fault you for not trying to play the downside on the strongest stocks in the strongest sector. So just on the upside. And The morning session on Cliff was very good as well, but this one was just easy to see, particularly when you look at how choppy DIA was. There were some false starts on that thing. So those Frog Champion specials like Cliff, Virgin Galactic, Simon Property Group, Devon Energy, U.S. Steel, Alcoa, these Frog Champions trade very nicely because there's less impact of the choppy indexes on them. They're more pure plays on the company symbol and the sector. Okay. So that's what I wanted to show on that one. I want to shift to we're going to look at the I can pull that up. We're going to take a look at the right. There we go. Okay, so the boys did a nice job in Campfire today. Oh, grab the wrong one. Let's try to pull this whole thing over. Stand by. So I'm pulling up the individual trades that were posted in Campfire today. This I want to say this was Luke. Nice markup. Netted a scratch for the first segment of EWZ. He was looking for that early OR5, which was a scratch. The second trade was a Z3 breakdown, but which then reversed and he scratched, and then he went right into the fake one go two, but then that failed. So then he was able to stop and reverse. He was aggressive about getting the second position in, and then that's what made that one only, I think, a 1R. There may have been, but still, that morning session scratches out, but good, tight discipline and the ability to change his mind. The second one he's got here, I want to say, is, I think this is still Luke. Here's a nice one on a supported spring crossing. Very clear entry, nice tight stop. I like the exit because what you have is the first hump in the summer, pulls back, finds support near the PSAR and the Dragon, moves up and then starts stalling at slightly lower highs. That's a good time to grab two. Why not? Get paid. I like it. Here's one that is, let's see, this nets out a little to the upside, a couple spring crossings. This was part of that choppy afternoon in DIA. Was a little bit tougher. The last segment would have put you in the green for sure. And then the red circles that are showing as the RLXD exit on the other side. But on the other hand, we've also seen there are days when that Z1 ain't bad. But by this time of the day where it's a little choppier, maybe getting paid and collecting money might lead you to make bank a little bit sooner. Still, a positive series there. This DIA returns. Let's see. This is about minus 1.6. That second, that next leg down would have paid for both of those. So stay in the game, stay with them, but good tight discipline. Don't mind that. And so here's one where that, and that's, see my previous comment, why that, that Z1 is still pretty good. Here's one where it actually lets you stay in that trade longer and comes in at 1.4. That's really good technique all the way through. It had three legs up. I want you to notice how the first leg up in that strong summer move was the biggest move. The second leg was a little lacking, and the third leg was even shallower. So that's a really good stop and an exit. Good discipline. Here's one where taking the SSC shot is good, but just notice where the opportunities are. That failed supported spring crossings, the sooner they fail, the more likely it is the other direction. So once you master the discipline of this one and get used to seeing the routine move on the other side, you'll find it easier to start taking that trade. Oh, these are all Stephen. Doing a nice job in here. Again, this is another one where that supported fall crossing or the collapsing dragon really pays off. And you saw that on my charts. But you're doing what I asked you to do, which was to learn those patterns. And I think you're only doing this for a couple days, but I think you're all ready to start to mark up the other side of the trade. Here's Eugene's answer to the quiz on spot the two supported spring crossings correct and spot the supported fall crossing correct. And yeah, that middle one is weird because the winter gets all the way across the dragon instead of turning to summer. And so that's what I think now that if on further reflection and closer analysis, I think it's really it's the sight picture that you want to see. You want to have seen before you pull the trigger, harsh winter, it's turned to spring, it's crossed the dragon, the PSAR is flipped, and the slope of that RL10 is still up. That's so I think we can have a little bit of relaxation on the order and the sequence, except the harsh winter's got to come first. This is Leanne in Australia land. She is just killing Alliance Leisure. I think that's the cruise ship lines. And she just crushes. She is crushing this stuff. This is that collapsing dragon, which also, it had just crossed the VWAP too. And so she's got a nice tight risk. And look at that beautiful exit. I'm not even going to say, hey, look at the supported spring crossing that immediately follows it, because if you're trading that, keep trading that. Here she is with a long SSC with a fractional loss, stop and reverse into a collapsing dragon, which pays, and then turns into a supported spring crossing and crushes. So I said Alliance, I meant Aristocrat Leisure Limited, ALL. That's turned into one of those specials, like a Frog Champion special that might fit into that category of Devon Energy, Cliff, U.S. Steel, Alcoa, that Simon Property Group. She's really getting proficiency on it. Hey, Luke, is that one of the ASX 200s? Is that an Aussie symbol down there? I think it probably is. So she's specializing in that, and I'm telling you, that's a good idea. And I think we already saw Luke's. Oh, here, Luke, was this one of yours also? So here's this is like a Z3 pinch and breaking out of the river, tight stop, new high of the day, minimum manageable risk box using Z, what is it, Z0, and gets a second position in, and 3.7 on the first one, 1.4 on the second one, so 5.1 overall. On the VIX, that's the volatility trade. That ain't all bad. Treasuries. This is Joe's. Nice work on this one, Joe. Now, I want you to notice he's using the hourly trade frame on this one. So he's noticed on the hourly trade that there was a supported spring crossing back on the 8th. Had a really nice climb from 153 to 165. But after that gap up, there was little to no follow through. It gapped down the next day, was rolling over. And so he's using about a like about a $2 stop on the hourly charts, getting short around 162, and he's identified a number of support and resistance levels on the way down. And does the same thing with the Walmart frame on the hourly charts. Are you finding the hourlies manageable? And then the Walmart trade pays off. And look at this beautiful strike exit, and the way he's marching the stop down, kind of like this looks like almost like the skin of the baby dragon or the previous bar's high. So he's marching it down, locking it in, and then gets paid about $4 on a $2 risk. So probably 2R on that one on hourly charts. So really, really nicely done. This is Ken Hums, I think. TZA, so this is the triple inverse Russell. So when the Russell's going down, this is going up. So this is one way that you can kind of get around that can't short in retirement accounts. So this does the same function as the S Dow, the triple leveraged for the Dow, but this is the triple leveraged inverse for the Russell. Takes a shot at the first supported crossing, that fails for a minus 0.53. It's only a 20-cent loss. Comes back, finds support probably the same level, basically the same, even a tighter stop, which is not unusual when you see that it fails, but then reverses right away again. That's like that supported fall. It went summer, fall, summer, and then he crushes it for 5R and on a single position. Now, where I would be looking for this, Ken, is take a look at that hump of the Z3 excursion. You know, where that the highest bump in the Z3 line. When it gets above that, you can probably think about, if you were going to add a second position, that's about where you should be thinking about it, because you've got enough gains on the first position to give you a little buffer, and it's cleared the enthusiasm level of the first failed effort. So, but even so, 5's nothing to snivel at. Here's a quick one, and I love this exit. I mean, the first one, the second one, the 5R, that's not your fault. You just did what you're supposed to do. But what you did on this one, to be able to take that shot and then quickly stop it after being enthusiastic about a 5R, hey, that's a non-trivial effort. I really respect that. Notice the sell-off all the way back down to the VWAP, finds support in the usual way, tight stop, gets paid. I like that one. And then, again, the sooner these things fail, now suddenly that collapsing dragon, or that the owl entry in there, looks really good. I want you to notice, Ken, the lower highs and the lower lows. So now you're starting to feel that thing going the other way. That was the afternoon run-up that let the indexes close really well. So when you see the dragon rolling over at a lower price level, that means the scales are being tipped the other way, and there were two legs down that would have been nice legs up in TNA. So if you look at TNA and get the inverse, you can toggle those the same way I'm doing UDOW and SDOW, and you'll get paid nicely in there. Okay. And here's a nice series also. The first one is a fractional. Just wasn't a lot of traction there. That's that afternoon move in TNA. Oh, okay. You got TNA on the other side. So what I just said, he just did. I forgot that you had done that. I'm not going to beat you up on this. Saw it, should have taken it. I will accept your judgment, but you gave it a nice shot in there, and there was clearly some. And I want you to see that whether you take that one right away or take the one you did, which I think is excellent, you quickly were able to reset and get the next leg up anyhow. So you start not giving back so much because you know how to re-enter. And that's going to really smooth out your curve. So here on the upside is 0.2 and a minus 0.2. So those first two kind of net out, and then you bring in 2, and that's another 5.3 in the afternoon. So really, I mean, it feels like you're feeling it. When you have a nice pair like that, TZA and TNA, now you can really kind of specialize on the leg that you like. Like if you like up and to the right, well, then you just kind of toggle back and forth between those two. And sometimes it's easier to feel the trade when it is always the same pattern, sell off and then up and to the right, as opposed to having to flip your mindset and going the other way. So I really think this was nice work today. And what you guys are showing is that you're acquiring the skill through practice and feeling confident about posting that stuff in there. And now knowing that you're going to post it should remove some of that angst. And you should already start noticing how much more professional you feel at the end of this week than you did at the start of the week. It's easier to mark them up. You're seeing the patterns quicker. You know that there's enough opportunities coming, and all you got to do is trade in a relaxed way, and I think you're going to be fine. Okay, so that's everything I wanted to cover. I got to get back and start cranking the reports and get those things out tonight. Tomorrow morning from 10 to 12. I don't know if it's going to last that long, but I'm budgeting a couple hours to answer the Q&A. It'll be the Q&A session for the hybrid traders from VTI. They've asked a really good set of questions. So this is the first week after that beating that I gave them last week. That was like 14 hours of just getting flogged unmercifully. So they did a great job hanging in there. I mean, these hour and 2 hour sessions in the evening are painful enough for you. Imagine doing 2 7-hour sessions. So they've been beavering away at it, working hard, and have given me some good practical questions. For the next 3 Saturday mornings, I'm going to give them a couple hours to answer their questions, and then we'll just pick up once a month for them. I will still do the regular evening podcast for the rest of the crew, tomorrow night at 8 and Sunday at 8. I've asked Eugene and Dave Anderson to really partner and take those 14 hours of the hybrid workshop and crush it down into 10 half-hour lessons or 10 hourly lessons, something 5 to 10 hours of just that rifleman's approach to SSC and probably SFC, and really neck it down to just what you need from scratch. So like if you were going to trade it, you were going to teach your wife to trade that, or your younger brother, what is the minimum, the absolute must-have, bare minimum of beliefs, because they're not going to be suffering through the years of experience and self-questioning that you have. They're going to come into this thing fresh, unburdened by awareness of how things can go wrong. So we know how things can go wrong, and that's why we may second-guess ourselves. So my contention is that the supported spring crossing pattern has all of the risk management baked into the cake, and so you don't even have to open up that dark closet. If you just follow those rules, it prevents the kind of runaway losses that are so devastating, but it allows you to experience some of the runaway gains. So what we're really doing is taking the histogram of these moves and really having tight discipline on the left-hand side, not taking those losses greater than 1 execution R, but being open to the possibility of multiple R captures on the other side. Now, here is the real secret sauce. I'm coaching you to set your position sizing R to be 5 times the execution R. So after a while, you start realizing, hey, half the time I'm not even taking a full execution R. Maybe I should let my position R be 3 times that instead of 5, so that my 1 R execution loss is really a minus 0.33. I'm going to order you right now, don't do that. So there's three variables in there. One of them is the size of the execution R. And then if you multiply that by 5 so that you get a position sizing R of 1.0, and then you develop, let's say, 100 of these trades, and now you have worked off the rough edges, and now you feel competent on it, and now you're ready to get larger and to start scaling towards full rate production. You start adding position size. Don't change the geometry and architecture and math. Keep it strictly at 0.2 and 5 to 1. The number you change is the dollars at risk per trade, because what you have is evidence that at that level of dollars of risk per trade that you can execute with positive expectancy, and you can have a disciplined approach to risk management. That's what the evidence is based on that exact architecture. So when you want to get larger, don't change the template and the math in that 5 to 1 relationship. Don't change that. Just ramp up the dollars at risk, and then your position size will grow, but you won't have changed the architecture and the things that give you the actual confidence. Because if you changed it to 3 to 1 and now the loss was minus 0.33, you have zero evidence that you can trade that with proficiency. So in fact, if you were going to change that architecture, in spite of me just telling you not to, what you've got to do then is go back and do 100 trades with the new architecture, and now get used to taking a minus 0.33 loss when you take the execution risk, and it gives you a loss. You gotta reprogram your brain altogether. You're used to taking a 0.2 loss, which is negligible, and that's nice because if you just take half of that yellow box, it's 0.1, and it's very easy to see 0.2 and 0.1 losses versus a minus 0.33. Is that a minus 0.3 or is it minus 0.4? And then half of that is minus 1.67. It's ugly. So just stay with the program. Make the loss minus 0.2, and if you only take a fraction of that, it's minus 0.1. Neither one of those is ever going to blow you up. And then you get used to seeing the price ladder in terms of that size of a stack. And it's 0.2, 0.2, 0.2. That's good. 3 of those is an average win. A 0.6 win is an average win. If you can net 0.6 a day for that week, you've got 3R for the week, and now you've exceeded your weekly goal by 50% because you're trying to net 2 position sizing R a week. There's, that one right there in the afternoon on one series of trades is 5R. That gives Ken a 1 position sizing R for the week. That's half his daily goal just from there. Oh, the other half of his weekly goal, was on the previous side with TZA. So on those 2 paired series, he's made his weekly target a 2R. So don't change the architecture, the geometry, and the arithmetic when you've got proficiency. Simply increase the dollars at risk per trade and let that grow in a logical fashion. Your position size will be bigger, but you won't have changed a single thing about how you're executing. Put a mind split on there where you have your trader is just executing the same architecture every day the same way all the time. He doesn't even need to know the dollars at risk. In fact, if I could, I'd have one of you working just the dollars at risk but not trading, and the other guy just trading but not even knowing how much money is on it. If you didn't know how much money was on it, you darn sure would be trading that thing with precision. So let's develop that mind split in our head psychologically so that we can learn how to scale quickly to the level of full rate production that we need, where we can safely exploit the edge of the system after we've demonstrated skill in the technique. Okay, so that's what I want to say about that for tonight. That should be a big aha moment for you. Okay, don't change the math. Stay with it. Otherwise, you got to start all over accumulating new evidence. Yeah, Luke, it's you can't believe. I mean, you've been listening to me talk for 9 months, almost a year. You've learned more in the last 2 weeks from the chart markups than listening to me babble for a year. And I've been telling you for a year to do this. I'm gratified to see you doing it now. The next thing I was going to do was call your wife and tell her to get your mind right. Don't make me do that. Take good care, guys, and we will see you tomorrow or in the chat room. Take good care.